Hello, good morning, everybody. Yes, thank you for the presentation. Thank you, and it's great to be here with you. My name is Krishtof Frenzy. I'm the head of the firm-wide energy and natural resources sector of Kinstellar. For those of you who are not familiar with our name, we are an international independent law firm operating in 12 offices in 11 countries in Central and Eastern Europe and Central Asia. And today I want to bring you a little more detail to a lot of the topics that were discussed today, including Repower EU, but more specifically the consultation on the reform of the European electricity market design by the European Commission. Some of the things that I will want to tell you today relate to what the context really is for this consultation, and what are some of the concrete measures that are contemplated by the European Commission, focusing in particular on two topics. One is long-term power purchase agreements, or PPAs, for renewable energy, and demand-side response measures. So why really having yet again another reform of our electricity market design in Europe, where there's a lot of context to it? It's not a standalone happening on the market. Of course, we are aware of the energy market crisis, which actually started way before the Ukraine war, and the war itself, which has basically turned our energy sector upside down. There was a mention quite a few times about Repower EU, and I will show you a bit more detail on that. But just in numbers, last year there were 12 EU energy minister sessions throughout the year, with 25 European Commission proposals and communications in the energy space, which is indicative in itself. Just to give you a snapshot as to the last couple of years in terms of the legislative framework of the electricity market in Europe. I mean, I've been advising energy market players for the last 20 years, including on the implementation of EU laws into national legislation. And I have to say that what the last 2 to 3 years have brought about in terms of change is immense. It's really a dense period. And if anyone is really interested in some of the background and the actual plan of the European Union, the first point of reference is possibly the 2019 European Green Deal communication, which actually lays out really the plan, which was then followed in the summer of 2021 by the Fit for 55 package. Yet again, a major legislative reform package, quite a holistic set of measures. And as you will see in my presentation, part of the topics we are going to tackle today really stem already from the Fit for 55 package, which was then followed by a number of further fundamental measures. What is it really that the European Commission is contemplating by way of this new consultation? And as we heard from the European Commission's representative, with yet again a new set of legislative proposals coming in just about 2 to 3 weeks. Well, it is a series of measures, quite interconnected ones. One focusing on moving away from actual short-term markets towards something that has to do more with long-term contracting, including strongly promoting long-term PPAs for renewables, and as we also heard, expanding potentially the use of contracts for different structures. Increasing liquidity in the forward markets, which is quite important if you're looking at long-term contracting. And one important point which particularly relates to offshore renewables is also part of this consultation and the proposals thereunder, which relate to potential transmission rights, transmission access guarantees for offshore wind projects, in particular if they are connected through what the Commission calls a hybrid project structure. In addition to that, whether good news or bad, but there is a plan by the Commission to maintain the originally intended extraordinary measure of revenue caps on the market, as well as we also heard, enhancing flexibility measures and DSR, demand-side response measures. But there are a couple of very interesting propositions around collective use, collective consumption of electricity and the sharing of electricity in a structured manner, as well as, and here is a watch your space, changes to the REMIT electricity market transparency and monitoring framework, which I will also mention a little later. So why is this moving away from the short-term markets? Well, actually, and it's kind of one point where you kind of see the past coming back, especially if you have been around long enough. So the Commission is saying that the very strong focus in our current energy market design on short-term markets and short-term trading has actually exposed households and companies to the significant price hikes and the volatility on the market. And therefore, the current legislative framework is insufficient to protect large industrial consumers, SMEs, and households. And therefore, we need to bring into the equation long-term instruments, i.e. long-term contracts, and incentivize the use of those in order to basically shift consumers into long-term contracting. Now, it is kind of interesting because many years ago it was the European Commission which has actually concluded that long-term contracts on the electricity market are a measure of foreclosing the market from competition that are distortive of the electricity market, and therefore they must be abolished, including in particularly in Central Eastern Europe and, to my recollection, in Bulgaria as well. So it's an interesting tweak now to turn back to that measure. Of course, we all understand short-term markets, volatility of prices, long-term contracts could be a tool to counter that. Now, just taking a look at where we stand with long-term renewable power purchase agreements on the European landscape. This is coming from Pexopark, an extremely helpful study or an outlook for the PPA market. As you can see, there's been a relatively constant increase in concluding long-term PPAs. However, last year, and for quite obvious reasons, happy to go into that, but maybe after the presentation, in terms of the volume contracted fell last year. Of course, very high market prices, people are less eager to conclude long-term contracts, but the number of contracts actually still increased last year. And as you may be aware, Bulgaria also saw the first 2 long-term renewable PPAs on the market being concluded. And I'm actually very happy of our Sofia team who have actually advised on one of those 2 long-term PPAs for renewables in this country. And this is the context in which the measures that the European Commission is contemplating are coming in. Now, importantly, the consultation is not fundamentally new to previously announced plans and measures by the Commission. In the Fit for 55 package, there is a major proposal to amend the Renewable Energy Directive, in which the Commission was saying already some 1.5 years ago, that member states must assess what regulatory barriers, i.e. legislative obstacles, are there for renewable PPAs, and what administrative barriers stand in the way, i.e. for example, in particular, issues with very long licensing processes. That member states must actually remove these barriers, as well as actively promote the uptake of long-term renewable PPAs. And actually, in that way, the plan by the European Commission was already at that time to ensure that there is a major uptake in long-term renewable PPAs across Europe, of course, taking care of some of the disproportionate impacts of that. And member states were actually prescribed or obliged to report on the measures they were about to take in that respect. And to date, only 8 member states have done any reporting of such measures. After that, as part of the Repower EU plan, which is explained in helpful terms by the previous speaker, there is, as part of that documentation, there is a Commission recommendation for the member states and market players, which in part focuses on PPAs for renewables. There are 2 segments in that recommendation. One focuses on how to facilitate renewable PPAs, and another one is how to expand the potential of concluding these long-term contracts for renewable projects by smaller market players. And as you can see, yet again, there were a series of measures contemplated as part of that recommendation, including very interesting ones like enabling the development of on-site or near-site kind of behind-the-meter projects, renewable projects with a PPA structure. They're risking renewable PPAs by way of such credit guarantees or insurances that would be backed by the government, by the state. This is something that is coming back and back again, and you'll see that in a sec. Encouraging national development banks and promotional banks to actually offer that products for PPA structures, again, with a view to incentivize renewable projects being built on the back of privately concluded long-term contracts. In the consultation, there are a series of quite interesting measures that the Commission has put in front of all the market players in terms of what is it that we could do to enhance renewable PPAs. And just to take 1 minute here to explain why this is actually really important. So far, the deployment of renewable projects has been mostly backed by government subsidies for a very long time, and then the market. But when the market really becomes very volatile, there is a concern by the legislator, by the European Commission, as to what will happen with the renewable projects going forward, in particular at a time when the whole idea behind REPowerEU, and this is not a surprise, is to help Europe get independent of Russian fossil fuels. And the REPowerEU plan is entirely based on the premise of the one and only tool that really will help us, which is kind of the silver bullet, is renewables. So if the market doesn't support anymore so strongly the building of renewables, what do we do? And that's one of the ideas behind these long-term PPAs and incentivizing market players to use these tools. So what the consultation put forward as ideas included pooling demand in order to give a much broader basis for not only the largest market players to have the benefit of these long-term renewable contracts. And actually, if you look into the details behind the numbers that I showed you, Europe's PPA market is very clearly dominated by the largest industrial customers, as well as a few of the large utilities. But most of the other market players do not actively take part in that market segment. There is an idea about public tendering of renewable energy rights, renewable energy capacity establishment rights, where certain shares of those projects could be contracted through long-term PPAs. Again, the credit risk issue being addressed by way of the government standing behind potentially credit guarantees and structures that could alleviate the off-taker credit risk from the equation. There's an idea about standardizing renewable PPAs, because in today's market, although there are one or two kind of templates like the EFAT template for corporate PPAs that are to some extent used, but there's a lot of individual negotiation of these contracts. There is an idea about obliging suppliers to actually procure part of their shares of electricity by way of long-term PPAs, and stronger obligations on suppliers and market players to hedge their portfolio by way of PPAs. Now, importantly, these contracts are private contracts between private parties. So the Commission is also looking at what to do on the public side of the picture, and therefore what the Commission is actually putting forward is a potential kind of scale of measures with which so-called two-way contracts for difference for renewables could be enhanced or increased on the market. And two-way CFDs actually stand for setup where there is no floor, and therefore sometimes it's the renewable generator which benefits, and sometimes it's the off-taker side, i.e. the government side, which can then push the benefits to the consumers. And the scale basically starts by saying, well, we could provide CFD support schemes for newly financed investments in renewables when there is a public stated support for the renewable project, then or through to measures like making two-way contracts for different structures mandatory for investments in new generation, which involves public funds, or actually allowing member states to make it mandatory to have two-way CFDs for both existing and new inframarginal generation capacity, which actually stands for basic renewables and nuclear. Now, this whole idea comes with two notes from my side. One is CFD structures are measures of state aid. So whenever a government is thinking about CFD structures, you also have to bear in mind that this has to come on the back of approval by the European Commission. I.e. the Commission will have a say in what the structure will be. And secondly, by way of basically enhancing CFD structures, you of course are intervening in the market and potentially might interfere with the development of the private investments. So watch out with that. It might not be a silver bullet you really need. In terms of demand side response measures, which are really important in order to complement the very high increase of renewables on the market if you want to have some kind of stability in your electricity system and in the grid. The Commission is contemplating a series of potential measures, including introducing new rules on aggregation and, importantly, electricity storage, as well as demand curtailment, which is, again, a very important topic from that perspective. Most importantly, what the Commission is saying, we now really should actually remove national legislative barriers. And actually, I happen to know that even in Bulgaria, there is now a new set of legislation on electricity storage, which seems to go in the direction the Commission is propagating. There is an idea in the consultation paper about changing the way we compensate TSOs, so system operators, in terms of CAPEX remuneration and OPEX pass-through to consumers, because it seems to be disincentivizing some of the system operators from investing and procuring further flexibility assets. So there's an idea to move towards what is called an overall total expenditure compensation scheme or TOTEX regime, which could help with such incentivization. There is a very interesting proposition about allowing sub-meter data, including private sub-meters, to be used by the system operators for actually settling and billing after demand-side response measures, including the use of electricity storage, which would, of course, be coupled by some kind of validation of those privately owned sub-meters, as well as developing new flexibility products like peak shaving products, which would have to be purchased by system operators, again, as a tool to incentivize further flexibility coming into the system operation landscape. And as we heard today, a new set of legislative proposals will be forthcoming in a couple of weeks. What I would say to that is the following. Even if you don't read through the 1,200 responses to the public consultation, which actually makes this public consultation probably one of the best attended such processes by the European Commission, there are a number of really noteworthy contributions to the consultation by the likes of ENTSO-E or ACER and CER, or some of the major energy sector professional associations. Not very long, but really interesting readings. There is a wide divergence of views. And actually, the fact that the Commission will be coming up with its legislative proposals in just about something like 2 weeks, in a way raises certain doubts as to how much the Commission will actually evaluate more than 1,000 contributions to the consultation. A little bit, it sounds to me as if it were a little bit half-baked already, what the end result will be, which would say basically that what is in the consultation paper may be pretty much reflected in the legislative proposals. Watch this space, we will see it. And if you have any questions, I will be around and more than happy to respond. Thank you very much for your attention.